This is the Asia Trade. I'm Shery at Gwanghwamun Square in Seoul as South Korean President Yoon Suk-Yeol vows to never give up following his impeachment.
And I'm Paul Allen in Sydney, where the markets just opened. The top stories this hour. South Korea's currency and stocks set for fresh volatility after Parliament impeaches President Yoon over his declaration of martial law. Chinese regulators pledged to step up efforts to stabilise housing and equity markets after top leaders call for greater stimulus. And we get a deluge of November activity data later this morning. And a cautious open ahead for Asia as investors prepare for a big week of central bank decisions, including what may be a hawkish cut from the Fed. Shery.
And Paul, of course, markets here in South Korea have to digest the impeachment of President Yoon on Saturday. I'm here in Gwanghwamun, Central Seoul, where it's a relatively quiet morning. Of course, we have seen days on the end of protests, both in order to impeach President Yoon Suk-Yeol and order others to wanting to keep him. But he has been suspended from power. Now running the country is Prime Minister Han Duck-soo. We had even seen protests yesterday after the impeachment with those who wanted to actually get the arrest of President Yoon Suk-Yeol, but he's vowed to never give up. Take a listen.
The journey towards the future, which I have walked with many people over the last 2.5 years, must never come to a halt. I will never give up. Holding in my heart all the criticism, encouragement, and support directed at me, I will do my best for my country until the very last moment.
I was at the National Assembly over the weekend watching that impeachment vote unfold, and the people outside of the National Assembly celebrating, rejoicing. But on the other side, there were others who did not want to actually see him impeached. Of course, Paul, this is a long process that could potentially dampen confidence here in South Korea. We do have the Constitutional Court that needs to come out with a decision, and potentially if that vote is upheld, then we could see presidential elections as well.
Yeah, well, in terms of confidence, Shery, we've heard a lot of confidence-boosting rhetoric out of China over the past 48 hours as well. We've got regulators making a variety of pledges, some very fine words. China's regulators intending to boost efforts to stabilise the economy and the housing market. So in terms of specifics, the Vice Minister at the Housing Ministry said, look, that includes boosting demand, controlling the supply of land for new development. We heard from the securities regulator pledging to enhance monitoring of futures and spot trading. And the Finance Ministry as well, saying it will improve regulation and increase the issuance of local government and special bonds. And all of this, of course, is after the work conference pledged to raise the fiscal deficit target and lift consumption vigorously. And we'll get a little bit of news about consumption as well later on today. Retail sales numbers out for the month of November, industrial production out as well. Both of those are expected to show some modest improvement. Let's take a look at how we're tracking in terms of market action. We've just opened here in Australia, been open for about 3.5 minutes. We do have a staggered open though. So in the early going, a little bit of softness there for the ASX. We're just off by about 1/5 of 1%. Nikkei futures trading kind of flat at the moment, and we've seen the yen softening again, hovering around that 153 level. The yuan's going to be an interesting one to watch going forward. We'll just see how far that depreciates in the event of a potential trade war with the United States. You saw the Aussie dollar briefly there on your screen as well. That showed some signs of strength after the jobs report last week. We're also going to get the mid-year economic budget update for Australia later on this week. If we take a look at US assets, we did see them sliding towards the end of the week. S&P futures trading kind of flat at the moment. We've got crude prices showing a little bit of stability there. New York crude $71.07 at the moment. We had some news out of Russia in terms of oil as well. We've got 2 Russian tankers, one damaged, one person dead after some serious storms in the Black Sea. Dollar spot index, meanwhile, hovering around 2-year highs at the moment. Shery.
And Paul, of course, will be watching very closely how the South Korean markets open. They have recouped most of the losses after the martial law declaration. And now that the impeachment has happened, we'll see how much the markets are pricing that in. Let's get the latest on South Korea's political turmoil with our economy and government reporter, Sam Kim, who joins me here outside in the cold. Thank you so much for coming out this freezing morning, Sam. But what happens now? I mean, I said earlier that Prime Minister Han Duck-soo is running the country, but there's a lot of wrangling and investigations going on at the same time.
That's right. There's going to be some confusion going forward, still remaining, given that there's police officials and investigators trying to actually question President Yoon Suk-Yeol for what happened on the night of December 3rd. But for the time being, in terms of governance, acting President and Prime Minister Han Duck-soo will be basically controlling the government affairs for the time being. Luckily for him, and maybe for the government as well, opposition leader Lee Jae-myung has said they will not try to impeach the acting president, which they had earlier actually warned about. But for the time being, I think the opposition also wants to portray the image that they are trying to bring stability after the impeachment vote that was successful.
President Yoon right now seems to want to fight this in the Constitutional Court. Explain to us how this could unfold.
Well, the Constitutional Court has 180 days to decide on whether they think the impeachment motion that was passed on the weekend is valid or not. Now, in previous cases, they took half that time, I think about 91 days for, President Park Geun-hye, which ended up being, the ouster of the president back then. So there's some possibility that President Yoon Suk-Yeol is going to try to fight this very hard because he said he would never give this up. So, there's going to be some political and legal drama going forward. That's what we're expecting for now, yeah.
I mean, he called it a brief halt to his rule after the impeachment. But we know, of course, that the markets are watching this very closely. And financial authorities here have been pretty active in talking to investors, in talking to journalists from overseas as well. The Bank of Korea just released a statement overnight, over the weekend as well. What exactly are they pledging to do?
Well, what was interesting about the statement from the BOK yesterday was that they were recommending measures including supplementary budget, meaning extra budget. Now, that's something that President Yoon Suk-Yeol had been very cautious about. I mean, he's been, kind of fiscally speaking, tight with budgets. Now, with him kind of suspended from power, it's interesting that there are policymakers, including the BOK, that are thinking that there's got to be some money, extra funding for the government to spend on the economy. That's interesting because this is a time when South Korea is expecting Donald Trump to be imposing tariff plans on the country, and they would need some stimulus to make sure that to tide things over for the time being while Yoon is not in power.
Sam, great to have you reporting here in Gwanghwamun in central Seoul. That was Sam Kim of Bloomberg News. Of course, we'll continue to watch the developments that could unfold for quite a bit, and of course what that means for the broader South Korean economy. Joining us now is AMP Deputy Chief Economist Diana Mousina. Diana, good to have you with us. So tell us a little bit about what can we expect for the South Korean economy. We had the BOK coming out, pledging to stabilize the markets, the economy. We had a budget, also a downsized budget, being forced through parliament by the opposition. What does this all mean as the political wrangling continues?
Well, the political uncertainty will certainly weigh on Korean share markets and also the won, I think, in the short term. But mostly share markets have actually sort of looked through some of this uncertainty. So from an economics point of view, I'm not sure that it actually has long-term ramifications for the strength of the Korean economy, which is still very much tied to global trade issues and, of course, the confirmation from the Bank of Korea that they will basically do whatever it takes, in their words, to stabilize conditions in the economy does also lend support to the view that we're not going to see a short-term disruption to economic activity, despite the political sort of turmoil that Korea is in. But markets have basically taken the news as a positive in terms of the stability for the Korean economy.
And yet you mentioned, of course, potential tensions around trade and the incoming Trump administration as well. Even if South Korea does not really suffer from direct tariffs, we're not quite sure how global tariffs could affect this very externally vulnerable economy, right? Are there any estimates at this point of how bad the impact could be? I mean, we went through impeachment proceedings back in 2016 and 17, but the economy was much stronger back then.
Well, in terms of the overall strength of the Korean economy, in the next 12 months, the only major downside really is what happens around trade, as you mentioned. So if the trade routes get disrupted from a tit-for-tat sort of escalation in trade issues that is driven by the US administration that's coming in January. But I think it's just basically too early to tell. It doesn't look like Korea is going to be directly targeted in those tariffs. So the main impact will really be what happens through China if China changes its trade routes. I mean, Korea is not really impacted from that. The major countries that are impacted from China changing its trade routes are countries like Vietnam, Indonesia, and Mexico, because we know that China has sort of tried to bypass the prior Trump and the Biden tariffs and found these new trade routes. So I'm not too sure if there's actually too much of a negative downside impact to Korea from trade. I mean, given that the Korean economy is so tied to global trade, of course, if we see a decline in global trade over the next 12 months, that would be negative for Korea overall. But I'm not so sure that that we can be certain as to what the impacts are going to be right now, because we just don't know what those tariffs are going to look like. If they're just targeted on China, then there's going to be less of a downside impact for Korea.
Deanna, of course, trade looming as a central theme for China heading into 2025, and specifically the risk of a trade war and tariffs with the US as well. And we heard a lot of announcements out of China over the weekend in terms of lifting consumption, commentary around land supply, around housing, more bond issuance as well. Is this going to be enough to get China out of the doldrums, and could we see more in the coming 12 months?
Well, I think that China is a very mixed economy right now. You do actually have parts of it that are still performing quite well. So export growth is still incredibly strong. Parts of fixed asset investment around industrial production are still doing okay. But the consumer and, of course, the property market is still suffering, particularly on the property investment side. So it is quite mixed. Don't forget that China is still going to grow at about 4.5% to 5% this year per annum. Compare that to a country like Australia, where growth is sub 1% year on year. So there are definitely still these pockets of strength. It's just not the strong growth that we have been used to from China. And of course, the weakness in the property market is seen as a big negative, and it's not that consumer-driven a strength in the Chinese economy, which benefits the rest of the world through the trade and the tourism route. So I wouldn't say that China is actually particularly weak. It just has parts of weakness. And I think that it's very likely we're going to get more consumer-driven stimulus announcements in the next 6 months. That's basically what the authorities in China have tried to indicate. I think we may get that early next year when we see more of the announcements from Trump around the magnitude of the tariffs that are going to be put in place.
Yeah, it's a great point you make around growth, and we often lose perspective on that compared to the rest of the developed world. The growth numbers in China are absolutely enviable. But right, in terms of stimulating those parts of the economy that are not doing well, the market still remains unconvinced. Do you think there is a possibility that we could see some more aggressive stimulus, potentially even QE next year?
I think QE was probably a bit of a stretch, but the type of stimulus that is basically needed is more direct handouts to consumers to really get spending going. I suppose more support for the housing market as well, both from a lending point of view, but then also support for the developers and trying to give the developers assurance about home sales. So it's really, I think, around consumer and housing that need to be the directed areas for stimulus. And I guess the problem for China is that they are in a bit of a liquidity trap. It's not that consumers can't borrow. It's just really that they don't have the confidence to borrow because of the volatility in the share market. And of course, the downside to home prices that have been basically plaguing China now for a number of years. So it's this liquidity trap mixed with issues of high youth unemployment, an aging population, and concern that property prices are still going to deteriorate over the long term. So I guess it's really changing the rhetoric and the long-term perspective of the property market there.
And Diana, of course, is a very busy week. We do have the Fed decision. We have the Bank of Japan decision as well. What are some of the big monetary moves that you'll be watching out for in 2025 as we see this week? What some of those diverging decisions could be?
Well, it is basically, Japan that is the outlier, and I guess really China, because they're still cutting rates, and Japan hasn't started the process of significantly hiking rates further. And Australia too, I guess, is in that camp that is lagging behind the rest of the world. We've got about 45% of global central banks cutting rates at the moment, about 5% in the latest moves are hiking. So about half are still on hold. I mean, I think the story for 2025 is really the pace of the rate cuts that are going to come from the major developed central banks. And if I look at market pricing now, I think it looks quite fair that we have this scenario where growth is basically still holding up, but the central banks can afford to give the economy a bit more back through rate cuts. So anticipating another 3 to 4 rate cuts from some of the major central banks like the Fed, Bank of Canada, Reserve Bank of New Zealand and Australia, I think is a pretty fair outlook for next year, assuming that we don't sort of get a blow up in terms of growth dynamics. I do think that the US is still going to be an outperformer next year in terms of growth. So further slow rate cuts from the majors and some more cuts from the People's Bank of China, although I don't think that that's the main policy that they're pursuing. I think that it's going to be more down the path of fiscal stimulus in China and quite a slow start to the hiking cycle in Japan.
Deanna, I just want to circle back to something you said. You mentioned earlier you were comparing China's growth rate, which we criticise, with the absolutely anemic growth rate that we've got here in Australia. And this week we do get the mid-year economic and fiscal outlook. It's not expected to be great reading, a deficit forecast of $25 billion. What policies do you expect from the government heading into next year, which is an election year, when you consider all the problems in Australia, the cost of living problem, the falling commodity prices and a weak trade partner in China?
Well, we've already seen a few announcements from the government around further cost of living relief. So we know the government's focusing on childcare. There's been more support as well for the housing market in terms of investing directly into housing. I think that that's going to be an important election issue because we know some of the generational problems that we have with the affordability problem that we have with housing in Australia. So I do expect more on housing going into next year. And I think that we are going to see more cost of living relief, whether that's from some sort of relief through essential costs. I think that that's going to be likely in the next few months. All
right, Deanna Mousina, AMP Deputy Chief Economist, thanks so much for joining us as always. Also coming up on the Age of Trade, central banks in focus, the Fed and the BOJ's final rate decisions for the year. We're going to talk Japan with B of A Global Research, plus a look at China's stimulus plans with the Harvard Kennedy School's Andrew Collier. Much more ahead. This is Bloomberg.
We're seeing inflation pick up again because, look, let's be honest, we financial conditions are very loose again. Some of that's the market itself. We have now animal spirits picking up because of the election outcome, and people are excited. That excitement has a negative consequence, which is that all of a sudden inflation starts to pick up again, and maybe the Fed can't cut. That, to me, is probably the biggest risk to the multiple.
That the Fed can't cut.
As much as people are anticipating.
Morgan Stanley Chief US Equities Strategist Mike Wilson there on inflation risks. And it is a big week for central banks. A number of countries set to make rate decisions. The Federal Reserve, of course, widely expected to deliver a quarter-point rate cut on Tuesday. Let's take a look at some of these foreign exchange boards at the moment. We've got the yen continuing to soften a bit, 153.51 against the greenback at the moment, although as those BOJ and Fed policies begin to diverge, it will be interesting to see how that currency pair moves. The Aussie dollar holding up reasonably well after last week's employment numbers, but as I mentioned, we do have an interesting budget update coming this week. Well, let's get more on the market outlook in a busy week of central bank decisions. Bloomberg MLive strategist Mark Cranfield joins us now. Mark, we just heard there a moment ago about expectations for the Fed, almost certainly a quarter-point cut coming this week, but how about 2025? The picture's a bit murkier there.
Yeah, well, the MLive question of the day today is, should traders be prepared for 0 interest rate cuts in 2025 from the Federal Reserve? And it's certainly a question which is on everybody's minds at the moment, because the Federal Reserve, obviously, they won't want to talk about policies which haven't been enacted yet, but they're well aware that when Donald Trump becomes president in January, he will bring a lot of changes to how the US administration addresses economics, how it addresses the rest of the US growth picture, and some of those could well be inflationary. And the Federal Reserve will need to keep that in mind. They're probably having it in private discussions. They may not even talk about it too much in the statement or Jerome Powell's presser, but you can bet that it will influence their outlook for 2025. And we may well see it through the dot plots. We may see a significant change in the way that the dot plots are pictured for next year, which is shifting to a much higher base than what we had in 2024. Whether the Fed goes as far as to suggest no rate cuts at all, that's probably a little bit of a stretch too far given where they are now. But certainly it's something that traders are already discussing. They're already coming to the point to view the fact that there probably won't be any cuts in the first quarter, and that may extend further into the year depending on exactly what policies and what kind of tariffs Mr. Trump employs on people around the world. So clearly the interest rate picture is significantly different to where it was just a few months ago because of the changes that are coming in the White House. So that is something that traders will have to price in, not just for the currency, but into the equity market, as the chap from Morgan Stanley was saying there, also into commodities and to the bond market as well. It will really make a big difference to everybody's outlook on all asset classes if the Federal Reserve looks as though it's going to take a long pause from its interest rate cuts next year.
Yeah, a long pause would certainly make for some fascinating Trump-fed theatre as well. Bloomberg MLive strategist Mark Cranfield there. Thanks so much for joining us. We have more ahead on the Asia Trade. This is Bloomberg. Just getting some news out of the Korea Exchange. The Korea Exchange saying it's going to form a committee to manage potential volatility, and it's also been holding a meeting to review financial markets. So moving to reassure markets after the political upheaval in Korea, which did, of course, see President Yoon impeached over the weekend. But as you can see there, the Kospi's done pretty well through it all, up better by 1.5%, even after that brief declaration of martial law at the beginning of the month. We've got the Korean won, though, continuing to be quite weak. It's lost about 2% of its value since the events of early December. OK, so those lines there, the Korea Exchange to form a committee to manage potential volatility. Well, South Korea is also moving to reassure tourists amid fears the political turmoil in Seoul will deter visitors. We're going to hear from the Culture Minister next. This is Bloomberg. Let's take a look at how we're tracking here in Australia after the first 30 minutes of trading in the new week. We're off about 1/3% at the moment, a bit of a mixed picture by sector, but it's the materials sector that's really leading the declines. Materials off 1.5% at the moment. Elsewhere, we've got Nikkei futures pointing a little bit higher to the upside, perhaps a function of the yen, which is softening again, 153.60. We do, of course, have a Bank of Japan meeting coming up this week. Not expecting any change there, but we are expecting to see the Fed ease by a further 25 basis points. Seeing S&P futures kind of flat at the moment. US markets did slide towards the end of the week. We do have a very strong US dollar, the Bloomberg Dollar Spot Index hovering around 2-year highs. Shery.
Paul, South Korea also urging tourists to continue visiting while actively engaging with foreign governments over the safety of travel groups. That's as political tensions, of course, continue to simmer following the now impeached president's failed martial law attempt. I spoke exclusively with Culture, Tourism and Sports Minister In-Chon.
So we've been doing well, but this time something like this has happened in the middle of the administration. So in my case, I think that changes in the external environment will take time to be resolved. And internally, it's very important for us to communicate with each other, especially through culture. So in times like this, I think we should play a role in providing some comfort to people abroad. And I'm pushing ahead with my work with that in mind.
We have seen a long history of civil movements in South Korea, protests as well, and maybe a lot of drastic political measures, including several martial law declarations in this country. What do you think it takes when it comes to bringing stability to the government and to society as well? As a culture minister, when you see the trends in South Korean society, is this something that you think about?
I think it is very crucial that any expression can be voiced. That's another form of democracy, where people can come out in the square and talk to each other without being hindered, speaking out at ease. Once this time passes, there will be a time when they can communicate well among each other. Of course, at first there will be a gap, so they may clash, and the voices may become louder because of different opinions. But in the end, they will continue to clash and exchange views with one another. And through this process, they will get to bridge the gap and communicate. Of course, it can be a disadvantage on the one hand, but on the other hand, it is a very strong point that democracy is guaranteed and it's working properly.
Are you having conversations with other countries' government officials? Who are you hearing from?
At first, everyone was very surprised. Now, as time goes by, people seem to feel that social life is proceeding as usual. There are no major changes or cancellations at the moment. If you have plans to travel to Korea, go on a business trip or attend a conference, I would like to tell you that there is no problem if you come as planned.
From all of the government initiatives that you're working on, there have been reports that perhaps some of the regional festivals have been downsized, that a lot of the big works cannot be done anymore. What are you seeing so far?
Right now, there are festivals going on. It's the end of the year and there's also Christmas, so the atmosphere should be a little upbeat. But our political atmosphere is frozen right now, so local governments are staying low-key or scaling down the size of events. However, from my point of view, I'm telling organisers to proceed festivals as planned if possible, but it seems difficult to hold such festivals in full scale in this atmosphere. So the economy is a little bit strained at the moment, so I'm recommending that local governments should not cancel those events and festivals. They should hold such events so that they can provide some comfort to the people's hearts.
Do you expect that, though, to have a lasting impact on the broader economy? People are not going out to celebrate at this very holiday peak season.
I think domestic demand is being affected a little bit, as well as the stock market. But what's really important is the external credibility of Korea, not only in terms of the country's economy, but also in all other areas, such as trust and credibility. If this continues, we may find ourselves in a more difficult situation with investment outflows or declines.
Now, as In-Chon, the South Korean Culture, Tourism and Sports Minister, who's also the government spokesperson, and he really told me that he was shocked when he actually saw the declaration of martial law. But as you could hear there, he was concerned also about the domestic economy, domestic demand, and people confidence, especially when it comes to big regional festivals. I gotta say, though, across me here in Gwanghwamun, there's a big installation, Winter Festa. Vendors were out in force and people were out shopping and just enjoying the sights over the weekend. So despite the fact that there is political tension, Paul, when it comes to people trying to celebrate the holidays, it seems it's still full on. The installations here in Seoul were beautiful over the weekend.
Yeah, certainly a good time to take advantage of the currency as well. We've seen the Korean won weaken about 2.6% since that brief declaration of martial law on December the 3rd, currently around 1,435. So it's good news for tourists, if nothing else. Take a look at a few of the other currency pairs there. We've got the yen weakening again, 153.54 ahead of this week's BOJ meeting. We're not expecting any change from the Bank of Japan. We're also keeping an eye on the euro. A number of interesting things happening in Europe at the moment. We did have Moody's cut France's credit grade from AA3 to AA2. That was an unscheduled change. We do have the new Prime Minister meeting Marine Le Pen later on today in the attempt to form a new government. And of course, Olaf Scholz likely to lose a confidence motion later today. That would see a snap election potentially in Germany in late February. The euro right now at 105.07. The Aussie dollar's one we'll be keeping an eye on as well. It did strengthen towards the end of last week after some reasonable jobs numbers. We're going to have a mid-year economic budget, a budget update later on this week as well. The Australian Treasurer, Chalmers, says the nation's facing headwinds due to China's slowdown and weaker domestic growth ahead of that budget update. For more on this, let's bring in economics reporter Swati Pandey. So, Swati, we get the MAIFO, as it's known, later on this week. What are we expecting to hear?
The Treasurer has spoken about the headwinds, as you said. China is our #1 trading partner. There's slowdown there, and which means less demand for our iron ore and coal. It's looking likely that the government will downgrade about $100 billion in export earnings over the 4 years to June 2028. There will also likely be some downgrades in company tax revenue. We have had surpluses in the past 2 years, which have been quite surprising to the rest of the world, and it also made Australia stand out compared to its developed world peers. But it looks like we will be back into deficit and long-term deficits, so structural deficits.
And of course, so much of this hinges on what's been going on in China.
Absolutely. And I mean, China has announced stimulus as well, and they are expecting 5% growth rate. But Australia is extremely dependent on China's demand, especially for bulk of our commodities. So if there is a big turnaround there, then yes, our books will probably look better. There's also domestic slowdown. Australia's economy in third quarter almost stagnated. It is looking that the current quarter will be better, but still we are in a domestic slowdown as well.
Well, we're going to hear from the Treasurer in the next 30 minutes, I think. What are we expecting to hear from him? What's this about?
So the press conference is to announce new RBA board members. So if you remember, last month there was a surprise last-minute passage of legislation that allowed the RBA's board to be split into two, monetary board and governance board. And the Treasurer is going to make appointments on those boards today. This will be effective from the 1st of March, so we still have time for transition. There are some media leaks about 2 new members on the Monetary Policy Board, but we don't know who they are.
Mm-hmm. So this was signalled some time ago after the review. How is this going to work, the new board? What does it mean for the policy making and the reaction function as well?
There are some concerns that about the reaction function of the RBA. So the RBA is right now amongst the most hawkish of the developed world peers. We haven't started cutting interest rates yet. Our interest rates at a 13-year high of 4.35%, and market pricing is implying a 100% chance of a cut only in May. There's a 50-50 chance of that happening in February. Now, all that could change with the new board, and depending upon who comes in and whether if it's effective from March, that means the board will be fully functional for the April board meeting. And whether they decide to start cutting interest rates or whether they retain the current position of the Reserve Bank, that's a question mark. Economists are closely watching out for that. Michelle Bullock, the governor, has said that the board will decide whether they would publish unattributed votes like the Federal Reserve does, and whether the new board members would go out and make public speeches so people can see whether they are on the hawkish side or the dovish side. So all that will also come out in due course. All
right, economics reporter Swati Pandey, thanks for joining us. Some of the other stories that we're following, France's newly appointed Prime Minister Francois Bayrou will meet with far-right leader Marine Le Pen on Monday. Now, this meeting's part of Bayrou's efforts to form a government quickly that can push a budget through the divided French Parliament. Moody's rating, as I mentioned over the weekend, did cut France's credit rating, citing its weak finances and political gridlock. Bayrou's choice to meet with Le Pen reflects her growing clout. The security forces of the Palestinian government, led by President Mahmoud Abbas, have carried out rare and lethal attacks against militants in the West Bank. The 11-day Palestinian Authority operation targeting Hamas and Islamic Jihad fighters was only confirmed this weekend. The PA says the raids have prevented imminent car bombings and other attacks. More ahead on the Asia trade. This is Bloomberg. Welcome back. You're watching Japan Ahead. Japanese markets will open at the top of the next hour. We have a slightly weaker yen, hovering around 153.50 at the moment. Nikkei futures moving a little bit more convincingly to the upside now, about 1/3%. We're expecting to see those gains when the market opens in a little bit over 15 minutes' time. We're also going to be getting some data out of Japan shortly, core machine orders and Jibun Bank PMIs for the month of December. Shery.
And Paul, the Bank of Japan set to discuss its rate hike path at this week's policy meeting, with officials seeing limited urgency to act, even with the next increase in borrowing costs coming closer. This is according to Bloomberg reporting. Joining us now is Izumi Devalier, head of Japan Economics at Bank of America Global Research. Izumi, always good to have you with us. What do you expect this week from the BOJ?
Yeah, thanks for having me. So we agree with the market pricing. We think that the Bank of Japan will keep policy on hold this week, and that at this stage, the probability of a move this week is actually quite low. I think that if you look at the economic data, it remains pretty positive, and you could argue that it's on track with the BOJ's baseline scenario. But the BOJ has been flagging uncertainties around the U.S. policy outlook, and it looks like they also want to wait a little bit longer for further information on the fiscal 25 wage hikes. So I think with market pricing for this week's meeting down to 15% for a hike, it would be a fairly large surprise at this point, and that's why I think the cautious BOJ is also, very unlikely to move for that reason as well.
Is the weakness of the Japanese yen going to be an issue going forward for the BOJ, though?
Yeah, that's always a risk that's lurking in the background. I would argue that their decision to hike to 0.25% in July was in part due to the fact that you had a fairly sharp run-up in dollar yen to 162, which in their eyes raised upside inflation risks from import prices. Now, if you look today, the dollar yen is back to above 153, and I don't think they want it, going higher. But if you look at import price levels, they are below the July peak. So I think they think they can afford to wait a little bit longer at the moment.
Well, Izumi, we're going to get CPI numbers out this week as well, the day after the Bank of Japan decision. How sustainable is the inflation picture looking to you, particularly in the context of a weakening oil price?
Yeah, so if you look at the good side, there's been some sort of mixed developments. On one hand, underlying energy prices, net of all the government subsidies, has been cooling down, reflecting the decline in global commodity prices. But if you look at food inflation, which is arguably the most important price for households, it's stayed very elevated because of the weakness of the yen. So goods inflation, like many other developed economies, is past the peak, but it's continuing to add to inflation. It's not going to contribute to disinflation. And more importantly for the BOJ, if you look at services inflation, there has been a slow but steady effort by corporates to pass on the rise in labor costs resulting from higher wages onto service prices. So that's where the BOJ is most concerned about. I think so far the signs have been good, but because they're relying on services inflation to continue driving the next leg of inflation, I think that's another reason why they do want more evidence that the fiscal 25 wage hikes will be robust.
So I know that you see quite a slow pace of increases for the coming years. I think you've only got us at 1% for the BOJ by the end of fiscal year 2026. But of course, a lot can happen between then and now, particularly with a new resident in the White House. What are some of the risks to these scenarios?
Well, I think the risk to the Japanese economy and BOJ policy from the new U.S. administration's policies are arguably two-sided. On one hand, if you have a stronger U.S. growth, stimulated by tax cuts, deregulation, that could boost the value of the dollar further, and it puts pressure on Japan's import prices and inflation. And that's also an environment of stronger, global growth. So I think in that scenario, the BOJ may be able to move a little bit faster. But on the other hand, U.S., for example, if the proposed tariffs goes through, that's a negative supply side shock for most of the world, including Japan. And I think it would make the BOJ more cautious about growth, manufacturing sector profits, and the ability of manufacturers to continue hiking wages aggressively. So for now, it seems like the BOJ's assessment is that there still isn't a risk of an unwanted price wage spiral where inflation gets disanchored to the upside beyond the 2% target, which is why I think if they are more cautious on the growth side, but it depends on how those two factors balance out.
Izumi, as an economist who follows the BOJ and tries to figure out what their next move is, how clear have the communications been so far?
Well, I think there has been a change in the style of communications between the old, Governor Kuroda and the new Governor Ueda-san. Governor Kuroda tended to deliver policy by surprise, but Governor Ueda has, set forward fairly clear guidance on, what it would take for the next hike to take place. They have said that if the data is on track with their forecasts, they would continue to hike interest rates gradually towards neutral. But I think where probably the difficulty in interpretation and where the frustration of some market participants lies is that even if they're saying that on-track data means further hikes, there is a gradation and threshold, right, of data required to meet that, to fulfill that guidance. So there's some subjectivity that gets into that judgment, and I think, and also the fact that FX, the developments around the currency are factoring into their decision, yep, which is partly driven by arguably largely driven by the U.S. developments. Factors outside their control also make it more difficult to forecast BOJ policy.
Izumi, I just want to jump in there. We've just see on the bottom of the screen, we've got some breaking news out of Japan. It is core machine orders for the month of October, and it's a big beat, 2.1% increase month on month. The expectation was for a 1.1% increase, and the big reversal of the 0.7% contraction that we saw in September. Year on year, the numbers look even more impressive. That is a 5.6% jump for core machine orders. The market was expecting a 1% increase, so a big improvement to that metric. No change there for the yen, still trading around about 153.50 right now. I want to get back to you now, Izumi. I want to maybe talk about the fiscal side of things because, of course, the Ishiba government not looking the most stable right now. How do you see the chances of the tax cuts being made permanent in Japan as Prime Minister Ishiba looks to shore up support?
Yeah, so on the fiscal side, the government, the ruling coalition and the third party, Democratic Party for the People, have agreed to a fiscal 24 supplementary budget. But the real discussion right now is over expansion in the income tax deduction that would spell basically permanent income tax cuts. It looks like that negotiation could take a while longer to conclude. But overall, when we look at fiscal policy direction in Japan, we think it's going to probably drift towards the easier side going forward because of the increased voices of parties like the Democratic Party for the People, who are arguing for tax cuts to shore up disposable income. So I think that's another reason, this expansionary fiscal policy, that the BOJ would have more work to do in normalizing interest rates.
All right, Izumi Devalier, head of Japan economics at BofA Global Research there. And you can catch Japan Ahead every Monday, 8:40 a.m. if you're watching in Tokyo. That is 7:40 p.m. on Sunday in New York. And subscribers can watch live on the terminal using the TV Go function. This is Bloomberg.
And Paul, we're now hearing from local media here in South Korea, KBS, saying that political parties are seeking to name 3 vacant constitutional judges. Now, this is very important because there were questions whether or not that impeachment bill could be considered even at all at the Constitutional Court. With those vacancies, they still need 6 out of 9 justices to actually pass the bill and approve that vote. But in the meantime, we're hearing from authorities as well, Paul, talking about really monitoring the financial markets for 24 hours. Korea Exchange also coming out with a statement saying that they will form a committee to manage potential volatility in the markets as we head towards that open.
Yeah, so some reassuring words from the Korea Exchange there, Shery, although it's got to be said the Kospi's performed pretty well after that brief declaration of martial law. It's up about 1% since then. The Korean won, though, has been suffering somewhat, down about 2.6% since the start of the month. But you can see there, Kospi futures pointing higher at the moment by about 2/3 of 1%. We do have the market open in Seoul and Tokyo up next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens as we head towards a busy week. We do have the Federal Reserve decision, also the Bank of Japan. And we already heard from the Bank of Korea, Paul, really talking about trying to bring stability to the markets, that they're watching everything very closely to support the economy. This, of course, as President Yoon was impeached on Saturday. Here in Gwanghwamun, it's a relatively calm morning, but we have seen, of course, protests over the weekend. Even yesterday, people out wanting the arrest of the president.
Yeah, we heard some reassuring words earlier today as well, Shery, from the Korea Exchange, saying that it's 24-hour monitoring of financial markets and it's going to form a committee to manage potential volatility as well. But it must be said the Kospi's held up pretty well since all of that upheaval which began at the start of the month. We've got trading now underway in Japan. We see the Nikkei, as expected, moving modestly to the upside there by about a fifth of 1%. The topic's also moving higher as well. We still have a very weak yen at 153.45, but the Bank of Japan, as you mentioned, they're expected to remain on hold this month. The Fed, however, we're expecting to see another 25 basis points of easing. Let's take a look at how we are doing in Korea. We, as I mentioned, heard from the Korea Exchange earlier saying that it's going to do what it can to keep volatility to a minimum, and we've got the Kospi pushing higher by almost 1% right now. So another very good day shaping up for the Kospi, the political turmoil notwithstanding. And the Korean won also seems to have put in a floor now. We were hovering around lows that we hadn't seen for a number of years. The Korean won had lost about 2.6% since that brief declaration of martial law on the 3rd of December. But right now, 1,428. So showing a some modest gains against the greenback there. Let's take a look at how we're doing in Australia. Meanwhile, been trading here for just over an hour. A little bit of softness in the local index. We are seeing the materials sector leading those declines. However, materials off by about 1.5%, and that is one of the biggest sectors on the ASX. The Aussie dollar, meanwhile, showing a reasonable amount of strength. We had some fairly good jobs numbers out towards the end of last week, but we're turning our attention now in Australia to the mid-year budget update, which we're going to get this week, and we're expecting to see the budget return to deficit. So there we have the ASX off by about 1/5%, Shery.
Paul, South Korea's impeached President Yoon Suk-Yeol has vowed to never give up despite the parliament voting to suspend his duties. Prime Minister Han Duck-soo has stepped in as acting president.
The journey towards the future, which I have walked with many people over the last 2.5 years, must never come to a halt. I will never give up. Holding in my heart all the criticism, encouragement, and support directed at me, I will do my best for my country until the very last moment.
The impeachment bill in order to remove the president is now at the Constitutional Court. Our economy and government reporter Sam Kim joins us now for more on the latest developments here in South Korea. And Sam, this as we hear from local media KBS saying the political parties are now seeking to appoint those 3 justices at the Constitutional Court. That's very important because the whole question was, can they even look at this motion because there are so many vacancies?
That's right. As far as I understand, there are 6 judges right now sitting on that panel, and you need at least 6 people on that panel to agree with the motion to make sure that that motion that was passed was valid. Now, there are 3 vacant seats on that Constitutional Court, and right now the Speaker of the National Assembly, who belongs to opposition, has said they're going to try to make it very swift to fill those seats. And there are already 3 people that have been recommended, 2 coming from opposition and the other coming from the ruling party. So they have 180 days to decide on this motion for impeachment. So they're going to try to make it very quick.
I guess what happens next is the question, right? If we eventually see this impeachment bill upheld and then we could trigger presidential elections, who are the favorite to potentially become the next leader of this country?
Right now, the person with the biggest chance, according to media polls, is a person named Lee, who is the leader of the main opposition Democratic Party. And he's a person that actually lost very narrowly to President Yoon Suk-Yeol in the election 2 years ago. Now, it's not confirmed that there's going to be an election. Now, the Constitutional Court has to approve their impeachment motion first. But if that happens, an election is going to follow within 60 days. And I think Lee, for the time being, is trying to sort of look the part, so to speak, by portraying himself as someone who's who's capable and who is much less radical than he might have seemed in the past, trying to characterize himself as a moderate person who can actually poach some votes from Yoon's conservative camp.
And we spoke to him, right, on Bloomberg, and it was interesting when I asked him if he was worried about tariffs or dealing with a new Trump administration. It was interesting how confident he was that he was saying don't listen to the rhetoric because Trump tends to be a very practical president. This seems to me like it's going to be a protracted sort of political wrangling until we get to potentially presidential elections, and who knows what could happen, right? In the meantime, what can we expect for the economy?
Well, for the time being, I think, some policymakers are expecting more stability with markets, given that impeachment kind of closes that volatile chapter of this whole saga. It certainly doesn't mean that everything is going to be smooth going forward, because we are hearing that there is going to be some investigation pursued against President Yoon while he's waiting for the Constitutional Court, because there are certainly accusations that what he did was treason, which is a very serious charge. And at the same time, policymakers, including Bank of Korea governor, have said there might be need for some extra budgets. And you could also expect some more stimulus in terms of monetary policy and also fiscal policy here. So, that could have some effect on the currency, foreign exchange markets. For example, potentially the further weakening of the won. But for the time being, with the impeachment behind, I think there could be some more stability possibly.
Bloomberg Sam Kim, thank you so much for joining us here outside in the freezing cold on what's relatively a more calm morning. But we need to stress that we have seen protests through days here in Gwanghwamun, central Seoul. Even yesterday, people coming out after the impeachment wanting to arrest President Yoon Suk-Yeol. Let's get more on what this could mean for the market. And in a very busy week for central bank decisions, Bloomberg M-Live strategist Mark Cranfield joins us now. And Mark, the initial reaction from Korean markets, though, seemed to be positive.
Yeah, I think investors were really hoping that this weekend would draw a line under the political chaos which has been going on in Korea. And certainly by having an impeachment vote, we're definitely a step closer to that. But as Sam was saying there, they still need to go through a judicial process. They still need to confirm it. But people will probably be taking an optimistic view about this to think that, yes, they will follow through and that a new president will be found. And it won't take too long. That's the biggest danger here for sentiment as far as Korean markets are concerned, is that the whole thing takes rather longer than investors are hoping. They think it's going to be a matter of a few weeks. If it turns out to be a few months, that will probably dampen expectations within markets. But certainly it will be a big surprise if we don't get some kind of bounce today in Korean market. You're probably expecting a couple of good days here for Korean equities, for the Korean won. Sentiment should surely be more positive here, and that will be reflected in some money coming back. And certainly, if we look at from foreign investors, have really been net sellers of Korean assets for quite a while here. Money's been flowing out pretty freely. So there's definitely room for it to come back. People are looking at valuations on things like the Kospi index, and we'll see that it looks relatively cheap compared to most of its peers in the Asian region. So clearly, it's a point from which Korean assets could start to do pretty well compared to the rest of those in Asia, certainly.
Mark, we've got, of course, the Fed decision this week. Markets have pretty much decided that it's a 25 basis point cut. But how about 2025? Things don't look quite so clear heading into the new year, do they?
Yeah, and that's why we have an M-Live question of the day, is that should traders be preparing for zero interest rate cuts next year? And that's a narrative not just for the Fed, actually. It's for all the central banks, the main ones this week. It's really all about the guidance. So whether it's the Federal Reserve, the Bank of Japan, or the Bank of England, no, there's unlikely to be any surprises in the decisions this week. But if there's room for traders and investors to have a bit of a shock, it's on what they say for next year. So if you think about the Federal Reserve, they obviously have to consider the fact that inflation may be more sticky going into next year. They'll have to reflect that. The Bank of England have just seen some pretty dire economic data in the last week, which will really question whether or not they can stay on hold for much longer. And then the Bank of Japan clearly has put themselves in a position where the messy political situation in Japan has caused them to delay their next interest rate hike. And yet people are pretty sure that they're going to signal there'll be one in January. So it's really all about the messaging this week, what central bankers have to say on where they're going in the first quarter of next year and beyond. And that's really what traders will be reacting to this week.
Volatility can we expect in the Japanese yen after this week?
Plenty, actually, because there seems to be a consensus that the Bank of Japan Governor Ueda will signal that January is very likely. And if you look at the way volatility is being priced in the market, that's the general assumption. It's come down gently. There's no great expectations for any shock. Now, if there's going to be a big surprise this week out of the Japan Central Bank meeting, it would be that they actually signal they need even more time to push up interest rates, because the Japanese government is trying to push through its next budget, is trying to stimulate the economy, needs more time for that. We're working with a minority government here. Also, look at some of the recent data. It's been a bit patchy out of Japan as well. So the risk is that Governor Ueda actually sounds a bit more dovish than is expected, and that is not priced into the market at all. If you look at the net positioning for FX traders, if you look at the implied volatility, neither of them suggest that traders expect dollar yen to go much higher. They expect it to go a little bit, probably no more than 155, but they certainly don't expect it to go back to 160 kind of area. That would be a big surprise. And if Ueda is not convincing in the press conference, that could be the big shock that we see this week, is that the yen actually weakens way more than is currently priced into the market.
All right, Bloomberg MLive strategist Mark Cranfield there. More heads on the Asia trade. This is Bloomberg. Right, we're just getting an alert from Korea. The probe team is set to ask President Yoon to appear on December the 18th. They want him to appear for questioning. Of course, there is a risk that Yoon and a number of senior officials face criminal investigation for potential charges of insurrection, abuse of authority, obstructing people from exercising their rights. This all, of course, relates to the brief declaration of martial law on December the 3rd. Yoon was impeached over the weekend, and now we have the Korea probe team requesting Yoon's appearance for questioning, and that would be on December the 18th. Shery.
And Paul, of course, we continue to watch those investigations into President Yoon. We know that a sitting South Korean president can only be impeached for treason and also insurrection. Those are the two crimes that people are watching, but really multiple probes ongoing, not only on the president, but people who are being questioned about their relationship when that martial law declaration was imposed. Of course, the former South Korean defense minister already detained and at one point, according to local media, attempting suicide. These are some of the developments, Paul, that we'll continue to watch here in the South Korean government, as we have now the Prime Minister Han Duck-soo acting president for the time being, and of course what more political uncertainties we can expect from this economy.
Well, China is set to release economic activity data for November. Traders looking for signs that recent stimulus measures are having an impact. For more, let's get to Bloomberg Senior Executive Editor for Greater China, John Liu in Beijing. John, we've heard from a number of Chinese officials over the weekend in terms of supporting growth, improving the control of supply for new land development, a number of other measures as well. Is this going to move the needle at all for markets?
It might. I think more important for markets, I think the thing that people will be watching, especially when we get the data later today, is how consumers are reacting to the stimulus. Retail sales beat expectations in November when we got the October numbers. We're going to be looking out for if retail sales again beats expectations. The economists that we talked to are expecting 5% growth in retail sales for the month of November. That would be the highest that we've had this year. That would go a long way in telling the market that this stimulus is starting to work.
John, we have heard a lot from policymakers lately from Beijing. Anything that could really move the needle at this point?
I think what the markets are looking for right now is some sort of explanation of this term that we got from the Politburo about extraordinary steps that the government is going to take to get the economy growing again. If that is in something like shopping vouchers, is it some sort of cash direct to the consumer? Something like that would really be an upside surprise. I think the market would react very strongly to.
Bloomberg Senior Executive Editor for Greater China, John Liu, there joining us from Beijing. Let's actually discuss all of the latest developments in China as well with Andrew Collier, Senior Fellow at the Mousina Rahmani Center for Business and Government at the Harvard Kennedy School. Thank you so much for joining us today, Andrew. What do you make of the latest announcements that we saw from Beijing, and will it make a difference when it comes to actually supporting the economy? We have seen a lot of skepticism about the details of some of those plans.
Most of my clients are very skeptical. I mean, I don't think the Politburo really knows how bad it is in the provinces. Everything I'm hearing from my sources suggests that there's a fairly significant layoffs. There's cutbacks in government expenditure, and even some state employees are really suffering and taking on second jobs. And the Politburo keeps coming back with these sort of itsy-bitsy measures to try to stimulate the economy through a little bit more help with the property sector and a little bit more help in stabilizing prices in general. I think also that they're getting bad data. Most of the data that I'm seeing exaggerates the degree of retail sales and disposable income and the increases that are going on there. Because if you look at some other data for some construction activity and so forth, it's much worse than that. So I think they're kind of out of touch, and they only have a couple of choices and ways to go forward. And I think they're going to face some really difficult positions in the future.
What can we expect from the People's Congress in March? Is that the place that could potentially release something more concrete to make a difference at this point?
Well, your senior editor just mentioned the idea of helicopter money to the consumer sector, but there's been no history of that in the last 20 years in China. In fact, Xi Jinping cracked down on the technology industry, which was very consumer focused in terms of Uber drivers and so forth. And he's also cracked down on the educational system. So there's not a lot of interest in helping the consumer. You'd have to basically change the entire nature of the state-owned system. So I don't see that helicopter money situation happening. If it did happen, it would be revolutionary for China. And it would have to be significant in terms of the amount of cash going out. But, you know, there's a lack of tax revenue. The local governments are starved of revenue because the land sales are down. The central government doesn't have any extra cash unless they just simply put new debt on the balance sheet of the central bank. So I don't see any of these measures happening until things get so desperate that the government decides that it has to change the nature of the system, which is I don't see happening any near term.
Andrew, do you anticipate we're going to have to see some more stimulus coming down the pipe from China? And I know QE is a dirty word in China, but is it something we might see in 2025?
Well, okay, so let's say you have a big stimulus. Who's going to borrow the money? I mean, the banks say, okay, here's some cash. And then you have the property developers saying, well, we really can't borrow because we have too much debt. You have the state-owned firms that are already producing too much goods for the global market. And the consumers are very reluctant to borrow because they don't want to buy property, and they certainly don't want to go out and buy a lot of dishwashers and washing machines and so forth. So that kind of stimulus with a quantitative easing where you basically put money out and let people borrow is just not going to work because the capital allocation is inefficient, and the vehicle they've used in the past via the property market is obviously out the window. So it has to be much more direct sort of stimulus to the consumer, and I just don't see the government doing that.
You're painting a pretty bleak picture here, Andrew. At what point does this translate into political risk for President Xi?
Well, that's a fascinating question. I mean, people are now starting to question the economic system. They're not questioning the actual Communist Party yet. But we saw in COVID that unrest there caused a change in policy. Once you get to a point where you have mass unemployment, then you could have a situation where the government has to actually change the nature of the economy and go back to maybe the Dengist regime when you had quasi-capitalism.
Well, we do, of course, have President Trump about to move back into the White House in January, and we're going to be very closely watching the trade relationship between the U.S. and China in the new year. So what's your outlook around this? How does this get handled, and where do you see the yuan potentially heading in 2025?
Well, I think the U.S.-China relations are the only ray of hope, believe it or not, because Xi is capable of striking a deal with Trump. He's a pretty decent politician in his own way. And if he sort of says to Trump, okay, we'll buy some grain, we'll do this and that, here's a win for you, then maybe that'll cool the jets of the Europeans who don't want EVs coming into their country in the United States, that doesn't want to increase trade. And that would help, that'd be their easiest win. And I expect to see some deal making going forward.
If we do see tariffs becoming a reality in 2025 and potentially very strict ones, how do you see the risks around overcapacity in China getting addressed?
Well, China cannot continue to export its way out of its economic doldrums. I mean, they can try to alleviate the pain, but they already have a 28% share of global trade, and they have very little consumption. So there's not much they can do. I don't expect the tariffs to be as bad as everybody thinks, because I think there's too much infighting in the Trump administration, and the Congress is going to push back. And the Chinese will try desperately to play ball by, as I said, buying grain or soybeans or something. So it will hurt the Chinese economy, but hopefully it won't be that bad, because this is the one area that's been pretty positive for China.
All right, Andrew Collier, Senior Fellow at Mosavar Rahmani Center for Business and Government at Harvard Kennedy School. Thanks as always for joining us. Now you can watch us live, and you can see our past interviews on our interactive TV function, TV Go. There you can also dive into any of the securities or Bloomberg functions that we talk about, and you can become part of the conversation by sending us instant messages during our shows. This is for Bloomberg subscribers only. You can check it out at TV Go. This is Bloomberg. The new French Prime Minister Francois Bayrou will meet on Monday with the far-right leader Marine Le Pen. Now, this meeting's part of Bayrou's efforts to form a government that can push through a budget through the divided French Parliament. Moody's ratings over the weekend also cut France's credit rating, citing its weak finances and political gridlock. Bayrou's choice to meet with Le Pen reflects her growing clout. Now let's check in on how futures in Europe are opening. We're setting up for what promises to be a fairly interesting session. We've got Euro stocks futures, though, pointing a little bit higher. We're seeing yields on French debt, however, starting to slip a little. We've got off by about 0.1% there. Now, this meeting between Bayrou and Marine Le Pen going to be a very, very interesting one in terms of getting a budget passed. France has been out of compliance with EU rules on debt for a very long time now. We've got more ahead on the Asia trade. This is Bloomberg. All right, getting some breaking news out of Japan. It is Jibun Bank PMI's partial reading for the month of December. We got the composite number in expansionary territory and an improvement on what we saw the month prior. 50.8 is the reading there. Manufacturing, though, in modestly negative territory, just below 50, 49.5. But the services PMI in positive territory by 51.4. So a bit of a mixed bag in terms of the PMI readings out of Japan. Earlier, though, we had core machine orders that blew expectations out of the water for October. 5.6% increase for core machine orders on year, with that Jibun Bank composite PMI reading there of 50.8. Let's check in on how markets are tracking in the early going to kick the week off. We've got the Nikkei in positive territory, better by about 1/3% off the back of some of that encouraging data. There is, of course, a Bank of Japan meeting later in the week, but we're not expecting any change. And the yen marooned at 153.60 or thereabouts at the moment. Here in Australia, meanwhile, we're going backwards. Not a great deal of confidence in the local market, particularly around the materials sector. Of course, the fate of Australia's materials sector very closely tied to what's going on in China. And take a look at the Kospi, though, Shery. Pretty good day there, better by 0.4%.
Yeah, and we're back to level seen before the martial law declaration. Let's get to Matt Orton, Chief Market Strategist at Raymond James Investment Management. Matt, good to have you with us. I mean, what do you make of the market reaction so far, and what will it take for investors to be confident to return to the Korean markets?
Hey, good morning. Great to join you. And I think it's going to take time for investors to gain a little bit more confidence. I think at this point, we've seen a lot of volatility. There's been a lot of sound and fury on, call it the political side, the headline side. But at the end of the day, the ruling party is still in power, and we've kind of seen the market move up and down and recoup most of its losses. So When I look at the market right now, perhaps some more internationally exposed companies, technology is an area that has to continue to work for the South Korean market. I'm a little bit more concerned that financials have been weak, since that's been the area of strength for Korean markets this year. But I think it's going to take time for investors to get confidence back. And when you look at other alternatives like Taiwan, where there's a huge dispersion in performance with Korea on a year-to-date basis, it just makes it continue to look all the more attractive.
Financial authorities have been pretty proactive during the political crisis here in South Korea. Do you believe them when they say that they can actually continue with government initiatives to improve valuations, like the Value Up program that investors have been encouraged about South Korea in recent months?
Yeah, I think that can continue, and the fact that you saw domestic investors come to the market on the pullback, I think is a signal that there is strength and durability to that continuing to play out. I think the key question is what international investors are going to do. Korea looks cheap relative to other Asian emerging markets, but it is cheap for a reason. And now you're adding an additional political premium to the market. So again, I think the fact that the central bank is willing to come in, the central bank has been very proactive in being seen and making sure that investors can have confidence. But I think time will tell. And ultimately, as long as we don't have too many more negative headlines or surprises and the impeachment process plays out, with the potential election 60 days after whenever the court rules on the validity of that impeachment, I think the market can then start to move forward. But in the interim, I would probably take a wait and see approach as an international investor, because there's other good areas of this market that might be more expensive, whether it's Taiwan, whether it's India, whether it's continuing to remain in the US, which is a core overweight of mine, until we get a little bit more certainty.
Matt, the picture is a compelling one, though. You say it is cheap at the moment, although you qualify that with it is cheap for a reason. We have a very weak won as well. But if you look at stories like the AI story and some of the Korean stocks connected to that, to what degree is all of that immune from whatever is happening on the political landscape, and do you buy at these levels?
Yeah, Paul, I think you've seen it be a little bit immune because technology has been the outperformer, which has been a more challenged part of the market on a year-to-date basis, where financials, which has been the strength in the Korean market all year, has been a little bit weaker. But it comes to a key theme that whether it's Korea or anywhere else in the world, I've been talking with investors a lot about lately, which is this idea of selectivity. You can choose any market in the world, and there's going to be good and bad investments. And particularly in Korea, where you do have exposure to the artificial intelligence theme, you've got a number of companies in the semi space that have done very well and should continue to do well. Their earnings aren't necessarily tied to political issues with respect to Korea. It's tied to markets that continue to do well. So as they fall on that news, those certainly look a little bit more interesting, but I think you do have to be very selective, and this isn't a market I would be looking at just to buy broadly speaking. I'd want to pick and choose my places within.
Matt, what do you make of South Korean hardware companies, especially around chips? I've heard the notion that perhaps software will be the trend when it comes to 2025, given, of course, also that we're headed towards potentially more tariffs and just trade tensions all around with an incoming Trump administration.
Yeah, it's going to be interesting to see how that plays out. On one hand, if there is a change in regime, if the ruling leader if Lee on the other political side kind of takes power, he does seem to be a little bit more Trumpian, at least with respect to tone. Maybe that's an overture to help mitigate some of the potential tariffs that could be levied on a country like Korea. But Korea is also a key ally with respect to China. So there could be a little bit of easing or more negotiations that are held as a result of that. I do think software is a key area of focus for me, particularly small cap software companies in the US. Around the rest of the world, I think we're going to have to see how a lot of those trends play out. I'm a little bit reticent to say that Korean companies that haven't already captured some of those gains are going to do well, just because the fundamentals haven't changed.
Matt Orton, Chief Market Strategist at Raymond James Investment Management. It was really great talking to you. Thank you. South Korea is urging tourists to continue visiting while actively engaging with foreign governments over the safety of travel groups. That's as political tensions simmer following the now impeached president's failed martial law attempt. I spoke exclusively to the government spokesperson and Culture, Tourism and Sports Minister In-Chon.
So we've been doing well, but this time something like this has happened in the middle of the administration. So in my case, I think that changes in the external environment will take time to be resolved. And internally, it's very important for us to communicate with each other, especially through culture. So in times like this, I think we should play a role in providing some comfort to people abroad. And I'm pushing ahead with my work with that in mind.
We have seen a long history of civil movements in South Korea, protests as well, and maybe a lot of drastic political measures, including several martial law declarations in this country. What do you think it takes when it comes to bringing stability to the government and to society as well? As a culture minister, when you see the trends in South Korean society, is this something that you think about?
I think it is very crucial that any expression can be voiced. That's another form of democracy, where people can come out in the square and talk to each other without being hindered, speaking out at ease. Once this time passes, there will be a time when they can communicate well among each other. Of course, at first there will be a gap, so they may clash, and the voices may become louder because of different opinions. But in the end, they will continue to clash and exchange views with one another. And through this process, they will get to bridge the gap and communicate. Of course, it can be a disadvantage on the one hand, but on the other hand, it is a very strong point that democracy is guaranteed and it's working properly.
Are you having conversations with other countries' government officials? Who are you hearing from?
At first, everyone was very surprised. Now, as time goes by, people seem to feel that social life is proceeding as usual. There are no major changes or cancellations at the moment. If you have plans to travel to Korea, go on a business trip or attend a conference, I would like to tell you that there is no problem if you come as planned.
From all of the government initiatives that you're working on, there have been reports that perhaps some of the regional festivals have been downsized, that a lot of the big works cannot be done anymore. What are you seeing so far?
Right now, there are festivals going on. It's the end of the year and there's also Christmas, so the atmosphere should be a little upbeat. But our political atmosphere is frozen right now, so local governments are staying low-key or scaling down the size of events. However, from my point of view, I'm telling organisers to proceed festivals as planned if possible, but it seems difficult to hold such festivals in full scale in this atmosphere. So the economy is a little bit strained at the moment, so I'm recommending that local governments should not cancel those events and festivals. They should hold such events so that they can provide some comfort to the people's hearts.
Do you expect that, though, to have a lasting impact on the broader economy if people are not going out to celebrate at this very holiday peak season?
I think domestic demand is being affected a little bit, as well as the stock market. But what's really important is the external credibility of Korea, not only in terms of the country's economy, but also in all other areas, such as trust and credibility. If this continues, we may find ourselves in a more difficult situation with investment outflows or declines.
That was In-Chon, the South Korean Culture, Tourism and Sports Minister and government spokesperson. We have more ahead on the Asia trade. This is Bloomberg. French Prime Minister François Bayrou will meet with far leader Marine Le Pen on Monday, trying to form a government that can push a budget through a divided parliament. For more, let's bring in news desk editor Jill Deasy's. Jill, what can we expect given how fractured the French political landscape is right now?
Well, look, Shery, the incoming Prime Minister here, Bayrou, I mean, he's a veteran centrist. He's supported Macron's government throughout the course of his administration. But at this point, I mean, in order to really kind of get things done here in France and to really hold on to this position and to pass a budget, he's really going to need to consolidate a lot of these fractured political groups within France. And of course, that starts with Le Pen's party. I mean, this far-right party certainly has, this majority. They really have a commanding presence here. And I think the fact that it's really her up first who he's meeting with illustrates just how much power she's really amassed in government, even if she's not the president right now. But ultimately, I mean, this really does come down to an issue of whether Bayrou can be the one to actually, consolidate all of these parties and help get this budget passed. Of course, his predecessor, Barnier, was the shortest-serving premier, in decades in France. So really, I think at this point, it's just trying to get all of these different groups to kind of consolidate their interests and get something together. How successful he's ultimately going to be there, I think we'll still have to see.
What will Marine Le Pen be looking to extract from Prime Minister Bayrou, especially in terms of the budget and getting that passed?
Well, Paul, at this point, what Le Pen wants from this government is for them to take a less aggressive approach to cutting the deficit. That's been one of the main sticking points here. Of course, that might be, something that's a bit hard for the centrist government to stomach. And ultimately, some of the issues here are whether or not you can actually get some more of the leftist parties, even the far left, to actually bite on a plan like that. They also have some disagreements over how exactly the administration would necessarily handle immigration. That's something obviously, that Le Pen feels very strongly about. So there are some different things here that it's not entirely sure whether or not this government is going to be able to come together on some of these issues. All of this, of course, against the backdrop that Moody's ratings just cut its credit rating for France, down a bit on a lot of these concerns over this budget uncertainty. So that's really just kind of adding to some of the pressures here to get things done. But again, that does require sort of consolidating and bringing together a lot of these very fractured groups in France right now.
All right, News Desk editor Jill Desis there. Investors are set to focus on chip makers, bank stocks and dollar-denominated debt next year to shield their Asian investments from uncertain US trade policies and a strong dollar. For more, let's bring in Asia stocks reporter John Cheng. So, John, when it comes to top trades in Asia, China is still the centre of attention. What are fund managers recommending?
So definitely China is still top of mind for a lot of EM investors. China is still a heavyweight in the EM index. And, we've seen a nice rebound since the policy pivot we saw in September. Of course, last week, the Central Economic Work Conference came as a little bit of a disappointment, but the overall policy direction is still, we're expecting more fiscal and monetary stimulus from Beijing next year. So, for a lot of fund managers, if they want to participate in China's rebound, one way could be to buy into onshore Chinese equities, according to Fidelity, which is more exposed to sectors like consumption, like property, that are direct beneficiaries of Beijing's stimulus policies. And another way to play China's rebound would be, buying Chinese bank stocks, because, we're looking at improving fundamentals next year, and also, a high dividend of this sector, which is very appealing to a lot of investors, especially when the PBOC is already in an easing mode. And also in previous episodes, where we saw, there are a lot of macro uncertainties. For example, we get a strong dollar and also Donald Trump coming into office, which means we are potentially seeing more tariffs against China. And in this kind of scenario, the banking sector has really outperformed in previously. So, that could offer some safety for investors as well.
Which is why we have also seen interest in other parts of the world, right? Especially when it comes to rerouting those supply chains. What other markets in the region are winning investors' interest right now?
So during our conversations with fund managers, definitely the name of India came up a lot. It's touted as being one of the major manufacturing alternatives to China. And according to fund managers, they're saying India stocks still have more upside going into next year. Of course, we've seen soft patches in the economy. We've seen soft patches in the earnings growth. But overall, speaking of the overall structural growth story, India is still looking very promising there. And one way way to play, the urbanization theme and the, evolving economy of India would be to buy large cap names in, for example, financial sector, healthcare sector, and industrial sector versus their small cap peers. And another way to play India's growth would be to buy local bonds, where investors are saying this country's small external debt would, and also inclusion in global bond index this year is really benefiting that sector. And also Indonesia has come up a lot. Similar to India, is a very domestically driven economy, and also we've seen the central bank really stepping up defense of the currency lately. So Indonesian sovereign debt would be one of the top trades recommended by investors. And on the equity side, then we're looking at probably Indonesian banks as well.
All right, Asia Stocks reporter John Cheng there. Well, Chinese social media users have given US President-elect Donald Trump several nicknames over the years. They're not very flattering. They range from capricious to baby. His latest, though, according to Bloomberg opinion columnist Shuli is perhaps the most interesting, that of nation builder. Shuli joins us now in Hong Kong to explain why. So, Shuli, why do some people believe that Trump could be good for China?
So some people think that Trump 2.0 will accelerate economic structural reforms that Beijing has been dithering on. I mean, looking back at 2018, what happened after Trump launched the first trade war? China devalued the yuan, weakened the yuan, and China also doubled down on industrial policies by flooding out structural industrial companies with a lot of bank loans. And it seems to a lot of people that those measures are not going to work anymore, right? That the yuan cannot be much cheaper because there will be capital outflow. And then the industrial policy is worrying the whole world. The whole world is worried that China is exporting its industrial overcapacity. So what some people think is that Beijing is going to come back to the domestic economy to boost the GDP growth. I mean, at this point, China's exports to the U.S. accounts for 3% of China's GDP, but its whole domestic consumption is only 40% of the GDP, way lower than Japan's 55% or Brazil's 63%. So some think that if China is just going to boost its consumption way by like 2 or 3 percentage points, that's going to buffer the Trump tariff threat.
Shuli, when it comes to boosting the domestic economy, boosting domestic demand, that's been a key issue and something that's been very challenging for policymakers, right? What are the policies that can finally have an immediate impact on this front?
I think a consumption coupon could work. I mean, giving consumers just plain stimulus checks like the U.S. is not going to work because China is in the kind of a balance sheet recession. Like any money that the Chinese get, they're just going to pay down their mortgage bills, etc. But the consumption coupons could work. Like, say like if you spend $100 on something and the government gives another 30% as subsidy. But I think China still, you can still see that the policymakers are very reluctant to give out blank consumption coupon checks because they still want you to buy, industrial goods like electronics, I don't know, like refrigerators, this and that. Whereas I think they should just say, okay, let me just give you 30% off coupon. You can go buy clothes, food, whatever. And that could perhaps work a little bit better.
Shuli Ren, our Bloomberg opinion columnist there, joining us from Hong Kong. We have more ahead on the Asia trade. This is Bloomberg.
Let's check some of the stocks to watch when markets open in Hong Kong and mainland China. Property developers in focus today, and this is after Beijing pledged to boost efforts to stabilise the housing sector, although without clarity on actionable measures. So we did hear from the Vice Minister for Housing over the weekend, talking about the need to boost demand and control the supply of land for new developments. So we've got the open in China and Hong Kong in a little over 35 minutes' time. Let's take a look at Bitcoin as well. It's continuing to push on to fresh record highs. The latest catalyst for this, well, we did have confirmation from incoming President Trump that there will be, well, he's confirmed his plans for a Bitcoin reserve. We'll see how that works, but the Bitcoin strategic reserve intended to become a reality under the Trump administration. Right, Korea, the market of the moment, was seeing pretty decent gains for the Kospi. It's erased all the bad things that happened ever since the brief declaration of martial law on December the 3rd. It also seems to be a flaw under the Korean won as well, 1,432 at the moment. And we also heard this morning that the joint investigating team probing President Yoon's botched martial law attempt is now going to ask him to appear for questioning at 10 o'clock on Wednesday morning. Yoon facing charges of treason and abuse of authority. Shery.
Yeah, we'll continue to bring you the latest developments from here in Seoul, but that's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China show is next. This is Bloomberg.